If you've ever dreamed of owning an apartment building or commercial property, but you thought, I don't have all the money, I won't qualify for a loan, or I don't have the experience, well, this video's for you. So what if I told you that you can buy commercial property, multifamily property, without using banks, without a massive down payment, and even without a high net worth? This strategy is called a master lease agreement, which I've been doing for over 25 years with great success and teaching our students. Look at this guy with the big smile on his face. His name is Dean. This year, he closed on a deal and he made over $1 million in profits using a master lease agreement. So if Dean can do it, so can you. In this video, I'm going to share with you what a master lease agreement is, why it's so powerful, even if you're just starting out, and why would sellers agree to do them in the first place. Okay, and this one here, what the typical deal terms are in a typical master lease agreement deal. You got to know this. And lastly, probably the most fun part, I will give you a real deal example that will be unforgettable. All right, okay, if you have any questions for me during this video, feel free to text me directly to Peter to 833-942-4516 and I'll get back at you. Let's get started. Here we are. I'm going to share with you what a master lease agreement is and why it's beneficial for you as the beginner. But first, let me explain that a master lease agreement is not a master lease option, okay? A master lease option, MLO, is for single-family homes, okay? Not for larger commercial properties. We are doing a master lease agreement, MLA. Okay, imagine if you are the owner of a $2 million commercial property, would you want a buyer that you don't even know put an option on your property? No. An option to perform? No. You want them to put an agreement, a master lease agreement on your property. Got it? Okay, so do not confuse the two. We are not doing a master lease option. There is no option money. Okay, so this is not an MLO, it's an MLA. Got it? All right, okay. So first of all, what is a master lease agreement? Okay, well, first of all, it's a legal contract, okay, that is drawn up by attorneys. It's agreed to by both sides. It is a mutually signed agreement between two parties, buyer and a seller, you and the seller, okay, where you control the property without owning it through this legal contract called the master lease agreement, okay? And so you're not going to get legal title, okay? You're going to get what we call equitable title. You will get legal title once the master lease agreement expires and you actually buy the property, okay? I will share that with you, how that works at the end of this talk here, okay? You're going to pay the seller upfront money, okay, to take control of the property that will be applied to the purchase price. And then you're going to pay the seller a monthly lease agreement payment. Okay, you're leasing it from the owner. Okay, here's what you get. You get all the cash flow. So after the rents are collected, the expenses are paid, you make the seller payment. Anything left over is yours to keep. So as you raise the rents, okay, you get to keep the extra cash flow. Okay, all the profits are yours. So if you buy a property master lease and over the next 5 years, you raise the value of the property, all that increase in value is yours to keep. This is one of the most powerful things using a master lease agreement, okay? And then guess what? You get the tax write-offs. You get all the tax write-offs except for depreciation because you're not the owner yet. But everything else is yours, okay? Amazing, okay? So why would a beginner want to do this? What are the benefits for a beginner to do a master lease? Here we are. Number one, it's a game changer because it allows you to get in the game, okay? By bypassing the bank requirements. You don't have to fill out an application. You don't have to sit in front of a bank committee. You don't have to go through an appraisal. You don't have to pay origination fees. You don't have to have them run your credit. What else? You don't have to show sources of a down payment and go through all the qualifications. All that is out with the master lease. It's between you and the seller. and you all have heard me say this, is if you have a motivated buyer and a motivated seller, beautiful things can be created. Okay? And then also, there will be a small down payment potential. The life-changing example I will give you in a few minutes is a student who put down 10%, okay? And the seller was happy to get that. I'll share with you how that happened. All right, so again, no experience, no track record needed, all right? If you can convince the seller to do that. I will share with you how to convince the seller in a few minutes, okay? And here's the big question. Here's one of the huge benefits of a master lease. What if you meet a seller, okay, and the seller is not bankable? Here's what I mean by that. Let's say you meet a seller direct, right? And the seller has a lot of repairs on his property, and the bank says, there's too many repairs, we don't feel comfortable doing this loan. Or what if the seller has lots of vacant units? Let's say there's 12 apartment units and half of them are vacant. The property won't cash flow enough for a bank to give them a loan. Okay, so what do? You have a motivated seller, you have a property with great potential, and the banks won't do it. What do? The master lease. Okay, so these two things are not ideal for a bank, but they are ideal for a master lease agreement. Got it? All right, so let's go on to the next life-changing topic concerning a master lease agreement. Got questions? Simply text the word Peter to 833-942-4516 and we'll help you. You're probably wondering, why would a seller agree to do this, right? You're probably wondering that. Here are 5 reasons why. These are 5 powerful reasons why a seller would, okay? All right, number 1 is a seller gets an upfront non-refundable payment. This is not a small payment. We're talking tens of thousands, sometimes hundreds of thousands of dollars, almost like a down payment amount, but not, okay? All right, so it's non-refundable, so the seller gets that at the onset of the lease. At the signing of the lease agreement, the seller gets his payment, okay? Number 2, probably the most important to the seller has no more property or operational responsibilities. So once he signs a lease agreement, you take over and you do everything. He just kicks back and collects a check, okay? All right, number 3, the seller gets a monthly lease payment, okay? And what I call true passive income for the seller. All right, so he gets to collect this as long as the lease goes to, and then he gets a lump sum at the end. I'll explain that to you in a few minutes, how that works. Number 4, the seller may defer paying capital gains taxes if he were to sell the property. Okay, so let me, real quick, 30 seconds on that. Let's say you contact the seller, and the seller says, Peter, I want to sell, but I don't want to pay capital gains taxes. Right? What's your workaround? Master lease agreement, because you can buy the property from him without being a purchase. It can be a lease. Okay, so that's a powerful reason why a seller won't want to do this. They can get rid of the property and not pay capital gains taxes. They will only pay taxes on the down payment and on the monthly income. That's huge for a seller, okay? And lastly, let's say the seller is burnt out, okay? A lot of those out there these days, right? Let's say the seller doesn't want to deal with the repairs. So a lot of repairs on the property needed, and he just doesn't want to do it. Or he's aging. Let's say the seller's aging or just wants income without going through the hassle of selling the property, working with an agent, getting it listed, having the showings, having to produce financials, and go through all that. He can just work with you through a master lease agreement. All right, okay, got it? All right, so those are the 5 reasons. Next, what I want to do is go through with you, what are the typical master lease deal terms? Let's do that next. Every successful commercial real estate investor has a mentor. Get mentored by me and my team by applying to be our next protege. Click the top corner. Here we are with the typical master lease agreement deal terms that you will find on a well-executed legal document. In fact, I'm going to start there at the bottom here. The first thing you need to have is to prepare for this agreement legally. Okay, our students have our legal agreement, our master lease agreement that I've been using for over 25 years. It's a 16 to 20 page document prepared for by my attorney many, many years ago and made better throughout the years. Okay. So my pro tip to you is do not use, if you're going to do one, do not use any online agreements. You have too much at stake here, and these agreements miss things and they're very weak. Okay. So don't go online or do AI to try to create one because it needs to be very comprehensive to capture all the things that could go wrong that I know of since I've been doing this for such a long time. Okay, all right, so here are the typical deal terms. Number one is the master lease will have a fixed price, okay? The future price is set today. So if you were to get the property under a master lease agreement for $1 million, and then 5 years from now was worth $2 million, you get that $1 million equity, not the seller. The seller only gets paid that $1 million, okay? All right, number two, there's a down payment. Okay, I am not a proponent for no money down. You will never hear me say that. Okay, so there needs to be some money down so you have skin in the game, so you be committed, and also putting money down will lower your mortgage payment to make this less risky. Okay, so as low as 10%. I wouldn't go any lower. Okay, next is the seller will get a monthly payment as agreed upon by you and the seller. Okay. Next, this is very important. There will be a set period for the master lease. Any lease agreement that you sign, if you were to lease an office space, there is a set agreement for that lease agreement to start and to end. Same thing with a master lease. Okay. So it'll be typically 3 to 5 years, depends on the deal. Okay. And the big question is, what happens at the end of these 3 or 5 years? I will do a special segment for that in a couple minutes, okay? And then next, this is huge. This is part of what's in our legal agreement with the master lease for our students is responsibilities, okay? So real quick, you're gonna collect your rents, you're gonna hire a property manager, you're gonna manage it yourself, you're gonna pay all the bills, you're gonna do all of that, okay? You will, and the seller is gonna collect checks every month. That's all the seller does, okay? Got it? And I just went over the legal part, which is extremely important. Got it? All right. So let's move on to the next topic. Ever wondered how pro investors find and analyze deals for maximum profit? How to secure financing even if you're a beginner? Or attract and keep tenants for steady passive income? Commercial Real Estate for Beginners delivers simple, actionable steps to master it all. Tap the link on the top corner for your free copy today. All right, what happens at the end of the master lease agreement period? What do you have to do, right, to get out safely from this deal? Remember, this is not a master lease option. There's no option. There's an agreement to pay off the seller, okay? All right, so let's say that you construct a master lease agreement deal, and let's say it's between 3 to 5 years, right? And the question is, at the end of the 3 to 5 year period, you're gonna have 3 options, okay? The first option is you have to pay off the balance owed to the seller. So if you have $1 million property and then you gave the seller 10%, you gave the seller $100,000, then you owe the seller at the end of that 3 to 5 year period, $900,000, right? So you have to pay that off. And how do you do that is you get a loan from a bank, okay? And after the bank pays off the seller, you become the legal owner of the property because this becomes a sale now. When you pay off the balance, the seller at that point has to be capital gains because at the end of this period, it becomes an actual sale. Okay, so you become the owner, and hopefully within this 3 to 5 year period, you have raised the rents, improved the property, so it's worth more now. So you have the equity to go to bank and not come out of pocket any more down payment. Okay, that's the whole goal. All right, number two is you can sell the property. Okay, you can sell it for profit and you can pay off the seller. Okay, and then you can pocket the profits and then buy another property. Okay, that's option two. Or option three is if you have if you have 5 years and you're able to increase the rents, do new kitchens and bathrooms, and get the NOI way high, so it's worth a whole lot more money now. So you're going to get a loan large enough to pay off the seller, right? Plus cash out or pull out your down payment as well, and then keep the property. Okay? All right, so you can do that too. All right, so those are 3 options. What I want to do next is there are pitfalls to doing a master lease agreement. I want to share with a couple of those are. They're very important. Let's do that next. as being a responsible mentor to many, when I give the good, I also have to give the potential bad. Okay, so here's the potential pitfalls of using a master lease agreement. All right, number one is if and when the seller loan matures in 1 to 2 years. Okay, so if the seller has a loan on a property, you can do a master lease. The problem is if you're trying to do a 5-year master lease, but his loan matures in year two, then you can't do it, right? So you probably need 3 to 5 years to get your rents up, to stabilize the property, to make sure the financials are good, to give yourself enough time to create the equity so you can safely exit. All right. So if his loan matures in 1 to 2 years, that's just not enough time to execute your exit strategy, to exit profitably. Okay, so number one. Number two is not having a conservative exit strategy beforehand. Anytime a student wants to do a seller finance deal, I will listen to them, but my next question is, how are you going to exit the property? What's your plan? Okay, the plan needs to be conservative and well thought out. And if it's not, don't do it. Too risky. Okay, because at the end of the master lease, are you able to create enough equity to get out? All right. Okay, so make sure you have a good exit strategy. Number three is if the owner is elderly or in extremely poor health. That's not a good thing. So if the seller is 90 years old, you probably don't want to do a 5-year master lease, right? All right. So my question here, I'll ask the students, if the seller is older or in poor health, is it worth it to you, okay, to deal with the seller's family members or their estate planner, right, if they were to pass away? Okay, and I would avoid this if you can. Now, in our legal agreement, we have a successor and or heirs clause, meaning that our master lease agreement will last into if the seller were to pass away. Okay, but my question is, do you want to deal with that? No, I would like to not deal with sellers like that and close it and then just let the heirs and family members mourn and move on with their lives. Okay, so so do that if you can. All right, okay, got it. Okay, the next thing I want to do is I want to give you a real life example of our student who made millions of dollars using a master lease agreement. I'll break it all down. Okay, I'm going to end today's video with a real deal example of our student Dean. His picture will appear on the screen. You can watch his videos. I have interviewed him a couple times. So awesome guy, everyday good guy, a burnt out corporate professional, worked in sales. And he approached us years ago and said, Peter, I can't do this corporate thing anymore. I need to get out. So he hired us so we can help him, and his life has been changed with this deal. Okay, all right, so here's the deal here. All right, Dean bought this property using a master lease agreement. And by this way, this deal was off market. Okay, so those are the best deals in my opinion. It's 117,000 square foot self-storage, mixed use, industrial warehouse, that type of property. And I'll show a picture on the screen there. It was a 5-year master lease. The price was $2.2 million. Dean put down 10% down payment and 5% interest only payments. So he paid the seller $82.50 per month, okay, for the next 5 years, every single month. The sellers were elderly, they were old, and they really enjoyed having this money and no longer have to deal with this 117,000 square foot building or having that huge responsibility. Okay, remember that's the key in finding these types of sellers. On day one, Dean was not cash flowing. It was somewhat breaking even. Okay, so when the property breaks even in our company, we spend a lot of time with our students to make sure they can get to positive cash flow. If I recall, I had over 70 phone calls, one-on-one phone calls with Dean over the course of these 3 years to make sure everything worked out well, and it did. Okay, so the day one income, the income was $21,250, and some of this it was actually a little lower because some of them he actually evicted. So we saw this as a great value add potential deal. Okay, where we could buy it, fix it up and make it worth more and give us a bunch of options. Okay. All right. So here's what happened 3.5 years later. Dean sold the property. Okay. So at that time, he increased the rent from 41,250 to 41,420. So he doubled the income. Okay. And then eventually sold 3.5 years later for $3.95 million. Okay. That's a $1.75 million profit by using a master lease agreement, but only putting down 10%. Okay. So huge upside. This is a huge life-changing deal for Dean. Okay. And Dean was not an expert. Okay. He owned a very small duplex, and then he owned with us, he bought a very small, like a 10-unit self-storage. Okay. Very, very small. It's like a small yard. This is his biggest deal to date. Okay. Now, real quick, here are the 3 keys of what Dean did right. Okay. Number 1, he found a motivated seller. Okay. These sellers were elderly. He knew them. And what he did was he nurtured the relationship so they will give him trust, letting him take over this 117,000 square foot facility. So this, like I said, this business, this commercial real estate multifamily business, is a relationship-based business. Always will be. Okay, doesn't matter what school you went to, how much money you have, all that doesn't matter. Relationship is number 1. Okay, and then number 3, Dean was diligent on steadily increasing the income. So we met dozens and dozens of times going over this strategy, getting the rents up to prepare him to sell a property at this level. Got it? All right, everyone. There you have it. The power of the master lease agreement. Do me a favor, if you enjoyed this video, click the like button. And if you want to get more videos like this delivered to you, go ahead and subscribe to our channel. Thank you so much, everyone. If you hung out this long with me, you are absolutely my favorite. And I thank you so much. I'll see you at the next video. Would you like to work with me? Every successful commercial real estate investor has a mentor. Learn more about my protege program right here.